听见资本本期视频为您带来的是大摩根士丹利在4月1日 TMT 行业香港闭门会的内容。当前科技市场弥漫着高度不确定性，增长放缓和关税阴云让企业投资缩手缩脚，下半年的复苏预期也打上了问号，这可能是个陷阱。半导体周期似乎还没见底，韩国对台湾地区的 HBM 出口数据放缓，这又是一个值得关注的信号。AI 领域的热度正在经受现实考验，市场开始质疑前期巨大的基础设施投入能否带来相应回报，特别是中国更高效 AI 模型的出现，可能意味着对算力的需求并非无止境，这对 AI 供应链来说无疑是逆风。内存市场因此出现分化， AI 溢价受到挑战，而更看重商品周期属性的三星电子相对受益。在中国半导体方面，美国 OCT 白名单的影响似乎没有最初担心的那么严重，中国为中国策略让本土封测厂受益，但同时碳化硅衬底市场正陷入激烈的价格战，中国厂商虽然份额提升，但利润压力巨大，云服务整体容量增长预计将放缓至明年，宏观和政策的不确定性让云服务商的支出更加谨慎，硬件组件的紧缺有所缓解，但 AI 服务器甚至出现库存消化迹象。在这种环境下，寻找具有自身驱动因素相对无聊但基本面扎实的公司或许是更优策略，比如像联咏科技这样的显示驱动芯片龙头。特别值得警惕的是，半导体生产设备领域可能面临迫在眉睫的地缘政治风暴，美国针对中国的新一轮强力禁令或在5月落地，前端设备商首当其冲，同时 CoWIS 相关设备的强劲需求也可能在年中见顶。不过面板级封装和黑奶 EUV 带来的大尺寸眼模板需求是潜在亮点，竞争格局也在变化，水平等公司因其稳健的工厂利用率和估值而受到关注。下游硬件方面，个人电脑市场上半年依旧疲软，寄望于下半年的 Windows 更新换代潮，但关税持续带来干扰，联想等公司正加速转移产能。服务器 ODM 厂商虽然受益于部分企业级 AI 订单增长，但对 GB200 的火热预期需要保持一分冷静，需求能否落地仍存变数。最后，中国智能手机供应链经历了一轮上涨后，基本面似乎已与股价表现脱钩，分析师建议获利了结并调整策略，关注苹果链情绪低点后的潜在机会，以及像瑞声科技、比亚迪电子这样经历调整后具备明确复苏或增长逻辑的公司。接下来是英文会议的全部内容，如果您需要我的投研助理人工校对的中文文本，您可以在频道的 Patreon 上获取。
Good afternoon and good morning, everyone. It is April Fool's Day, April 1st, Tuesday. Welcome to Morgan Stanley Asia TMT webcast. My name is Sean Kim. I'm joined here with our colleagues from the region. So we have Daisy Dai, Andy Meng. With me here in Hong Kong, we have Downey Yen joining us from Taipei with Howard Kao, as well as Wadaki-san from Tokyo. And before we get started, please note that this event is for Morgan Stanley institutional clients and financial advisors only. This event is not for the members of the press. If you're a member of the press, please disconnect and reach out separately. Also note that this webcast and your questions may be recorded. During this webcast, you can send us a question at any time from Ask a Question text box, and we'll have time for a few of those at the end of our presentations. So today we have a pretty large lineup. We just came from, I think it's called SEMICON China last week in Shanghai. We'll give you some of the updates on that. We'll talk about the cloud semis and how we see the recent developments. Talk about what we're seeing on the SP side coming from Japan, and a bit of PCs, and then Andy Meng made a big call on taking profit on China's smartphones, and that would be something that we would present today. But before we get started, I just wanted to talk about some of the views that we have here. We should look at tech in general. So, if you look at markets, it's so bad that it is good. So it's just tempting to buy. And if we look at history, the hardest time to buy is when the uncertainties are greatest. But only if you think that you are going to be better off in the future. There is still concern about what is ahead of us on the macro front. We do have, to factor the higher risk of a slowdown when we think about growth. There's transmission of tariffs into inflation. You have companies pretty much across the board that are sitting on their hands in terms of CapEx, R&D, M&A, and that is going to be very difficult because they're going to keep postponing things, and that's a very large growth driver for the economy globally. So we hope that a lot of these uncertainties come tomorrow are off. Otherwise, that's a big headwind for growth into the second half. And we know that there's been a lot of pre-buying in China ahead of potential risk of new restrictions, and as well as ahead of companies and people trying to get in front of the tariff implementation. So I think in general what the market is thinking is that we may have a quarter or two that are slower than what originally expected. So the second half recovery narrative, I think, is a question mark as well. Tariffs, I think, simply put, we can frame the tariff risk tomorrow. So the U.S., the Trump administration is talking about tariffs that come in a range of $600 to $700 billion US. If that is what is actually going to happen tomorrow, it is going to be very difficult for the market to digest this amount because it represents close to about 2% of our U.S. GDP growth. And that's going to be very difficult to manage that. If it comes in lower, and we have no idea, let's say it comes at, let's say, $200 billion, for example, instead of $700 billion, then that is something that the U.S. economy can get through and continue to grow. And then you can say that this is going to be a clearing event because everybody is negative into this event. The problem is that we don't know. And the other problem with technology right now is the difficulty that there's been constant change in the message that makes it very difficult to model what the future will look like, especially if you're dealing with China tech. So you're trying to protect, to project forward what we think we know about, to do our best in terms of getting through the noise. So we hope that April 2nd gives us some clarity so that business can actually move forward and we have a better ability to actually forecast what the demand will look like. So very pivotal moment tomorrow, and we'll see. But if we take a look on here on pretty much the cycle, which is measured in terms of Korea exports of semiconductor year on year, versus the SOX index. I don't know what we're using 2X's in the SOX. I think it's referring to just SOX with 1X. But anyways, there is this correlation, and the cycle is definitely into a downturn for the third quarter now. We peaked in July in terms of year on year. If you look at global semis, revenues actually peaked early in the third quarter. Memory peaked in second quarter. And we still haven't gotten through a negative territory yet. And I think the cycle kind of tells us that maybe there's a bit more to come, and it'd be very interesting if the cycle can actually recover from here, which is probably unlikely in our view. In terms of the AI trade, I think China has become very much part of this AI story, and effective models here in China with DeepSeek really don't require as much compute, and I think that's what the market is actually discounting. And maybe we have gotten way ahead on CapEx spend relative to what we see in terms of what the demand is for all these AI supply chain names. And I think that's part of the sobering up that we started, I think, back in September. But this DeepSeek story brought actually things even back further down to earth. So I think to change this AI narrative for the supply chain, I think it will require the promise that if you can show that this is going to be worth trillions of dollars of demand versus hundreds of millions of dollars of demand that is more likely at this point, that is actually what the market is actually looking for. The ROI increasingly is actually being found in the application layer more and more, not only in China, but also in the US. And while foundational model companies continue to search for their ROI and spend even more money on GPUs, we're seeing a lot of private markets that are betting on AI applications, like the ones that are actually contextualizing awareness within and building deeper moats. And of course, companies in China, the platforms are driving a lot of new businesses because of DeepSeek, and that's where the opportunity is. While the market on the public market is still aware of infrastructure spending outpacing real demand. So I think that doesn't change for the time being. And that brings us to the narrative of my sector, which is memory, where you do have three different buckets. You have the bucket of the commodity cycle, the AI bucket, and then the DeepSeek China bucket. And DeepSeek is actually a headwind for AI because of the effective models that don't require as much compute, and that's where SKN is sitting. Whereas it is a big driver to the commodity cycle because you're actually buying a lot of commodity. You can run DeepSeek on gaming PCs, for example, and to me that benefits Samsung because there is no premium on AI. With Samsung stock trading at 0.9 times book. So that's where the preference is on a relative basis. And then I think for Samsung, I think we have many catalysts in the near term. I think one is that anti-AI flows in emerging markets. So it's a beneficiary of some of the funds flow that are actually taking profit on AI names. The short band list, it typically in Korea that started yesterday, typically historically funds tend to gravitate towards cheap and value names. You have the optionality of future HBM qualification, let's say HBM4 in the second half. If that materializes, that would be optionality. And in the case of a macro slowdown, the company is actually relatively better able to weather any downturn relative to some of its competitors in the region because of its balance sheet. Lastly, this is just an interesting chart that we see. So we pay close attention to Korea semiconductor exports to Taiwan, which is the blue line. Export to Taiwan is basically HBM being shipped to TSMC for its CoWoS assembly. And you're seeing that into the February and January and February print, there's been a sharp slowdown. And to us, that's just not a good data point. It's probably an air pocket that companies have guided in the first quarter. But nevertheless, not as bullish as it was before. So these are my remarks, and from here, let me pass on to Daisy. Daisy, you guys spent a lot of time last week in Shanghai on Semicon. So what's the takeaway for Chinese semiconductor companies?
Thank you, Sean. Good morning and good afternoon. I'm Daisy. I cover China OSAT backend equipment and power discrete in Greater China semi space. So Charlie and our team has published a very detailed takeaway report this morning. Topics including China AI inferencing, China lithography development, including SMEE and the C-Carrier. So C-Carrier is the hottest booth in Semicon China. You can take a look. My focus would be OSAT and China silicon carbide substrate. So firstly, for China OSAT, there is a new update regarding the impact of U.S. OSAT whitelist. So to recall, the U.S. implemented an OSAT whitelist at the end of January this year, which affect the China IC design houses with products using 16 and 14 nanometer. And at that time, we thought OSAT companies on the whitelist like ASE and MCO could benefit from the order shift. Our supply chain check indicates Samsung Foundry has resumed the wafer shipment to some China OSAT, with the end customer confirming that the chip is not for HPC or AI-related use. We think it's possible that TSMC may follow the suit in the coming months, although TSMC has not commented. If so, the market share loss of China OSAT with higher revenue exposure to China local design houses may be smaller than our prior expectation. Also, we think China OSAT companies are well positioned to benefit from the China for China strategy. Some Taiwan design houses are leveraging the cheap pricing offered by China OSAT to manufacture consumer electronics related chips like Wi-Fi, TV SoC, or even PMIC to compete in China markets. Even some global IDMs like NXP or ST Micro, they both have their own back-end fab in China, but they are still using China OSAT for their product selling in China market. Secondly, for the silicon carbide substrates. So China substrate vendors, they are aggressively gaining global market share, but the pricing continue to decline. Many silicon carbide substrate companies display at Semicon China, including SICC, Tank Blue. Based on our checks with industry participants, silicon carbide substrate pricing decline continued in last year, and the 6-inch silicon carbide substrate pricing was down from RMB 3.5K to RMB 3K now, and 8-inch substrate pricing down from around RMB 10K in third quarter last year to RMB 7 to 8K now, as you can see in this chart. So the 8-inch pricing decline is more significant than the 6-inch. So SICC already reported its full year 2024 result. Its gross margin also declined in the fourth quarter, mainly because of the pricing decline. At the meantime, Chinese players' market share has increased quite meaningfully in past year. So SICC in 2023, its global market share is 14.8%, but its global market share has risen to 22.8% in 2024 and ranked number 2 globally. Also, during Semicon China, there are emerging applications like AI glasses using silicon carbide for AR waveguides. But based on our experience, we think it's still at the early stage. So user experience at the booth not good. But we think in the future the product can improve. So I will stop here and hand it back to Sean.
Yeah, thanks for that update. So let's move to cloud. Daniel, what's the latest on the cloud?
Sure. Thanks, Sean. Morning, everyone. This is Daniel. I cover cloud semis and some PC semi space. To update, I think on cloud side, the top-down view, we don't have any change. I think we are experiencing the overall cloud CapEx year-over-year slowdown throughout 2025. I think usually during this time, it would be very, very hard for stock to re-rate, especially high PE stock, cloud related. And I think the latest update is that, as Sean mentioned, I think there are a lot of the macro uncertainty, policy uncertainty, which impacts a lot of fronts. So looking back, I think in the past 10 years, a lot of times I think the macro uncertainty will slow down the spendings for a lot of enterprises, including the CSP. For example, I think many years ago, there was a currency instability, currency very, very unstable. So at that time, for a company like Microsoft, it would take more meetings for them to decide when is the timing, where is the location to build their data center, and what is the most preferred time to move in the equipment, from computing to networking to storages. So this matters. I think that's the top-down backdrop. On the bottom up, we do see, I think the tightness for some of the components gradually resolving or stabilizing. For example, for a company I cover called ASIC, they supply the BMC for AI server and for general server. They do see there's a recovery very strongly from China that's highly related to H20 demand. They also see some general server recoveries from US because the CSP are more willing to migrate to the new generation of CPU server. However, for AI related, especially regarding GB, I think they are seeing slowing down. So right now, I think BMC is not in tightness anymore. And at the same time, the company is guiding slower than expected revenue pickup in 2Q because of the AI server inventory digestion. I think that's the risk and very typical phenomenon during the cloud CapEx slowdown. Because of this, I think for me, I will try to look at some companies which have their own self-help story within the old tech. That's the reason why this morning we moved our topic from my side, from S-Media to Novatech. This is a very boring stock in Taiwan. Novatek doing the driver IC. But I think this year will be a great year for the company. First, we do see that they continue to expand their market share on high-end OLED driver IC. To note, right now OLED the penetration is still going up. And we do see Novatek, they are taking share back from LX Semicon at iPhone. At the same time, they are also expanding their market share in China. For OLED driver IC, so far, we still don't see China competition because the technology really needs a very, very comprehensive design. And also the spec migration is very fast because of the smartphone. The overall generation migration is also very fast. So we are seeing the company, the revenue can continue to grow because of the OLED. That's the first point. Second is that I think for Novatek, as they are very, very comprehensive, very savvy on supply chain management, we do see that they are leveraging lower foundry cost and also lower OSAT cost globally. I think both in Taiwan, in some in Singapore, and also in mainland China. So because of the better product mix and also the foundry and OSAT cost down, I do think the company can reverse the margin downtrend for the very first time since COVID. Usually when the margin goes up, I think they will have higher earnings plus a multiple re-rating. And at the same time, we don't need to worry anything about any debate on macro and also the slowdown of the cloud capex. I think it's pretty straightforward. So boring stock, heavily shorted, 15 times 5% yield rate, 25% free cash flow yield. I think right now the company is my topic within my coverage in Taiwan. So let me stop here and hand over back to Sean.
Yeah, Daniel, I think boring is really good in these markets. So with that, let's move on SPEs. Wadaki-san, what's the latest in your sector?
Thank you. I'm Tetsuya. I cover Japanese SP sector, and I visited Hong Kong and Singapore last week, and I'd like to comment about current hot topics on this sector. Overall, many investors now not bullish on SP sector. There are many concerns. One is China. As I said before, SMIC achieved 5 nanometer, Intel not yet, and SMIC tried to go to 3 nanometer. Now, Huawei is developing EUV lithography system. They are developing 3 kinds of light source, like LDP, same as Lucio, LPP, and cyclotron. And SMIC also would like to use adapt octoprint, but it looks like difficult. And it means that Chinese semiconductor technology now become better than US semiconductor technology. US government are now really angry to China and would like to kill China semiconductor industry. And now in the US House of Representatives, ASML and Tokyo Electron have been accused by name. And the Special Commission on Semiconductor Regulation of China was established in the United States last year. And in U.S. government, regulation by Democrat Party are not effective. And this result disaster and catastrophic damages to U.S. industry, and semiconductor technology will affect the military balances. So we think new strong ban will come to semiconductor equipped industry, and the timing may be May. It is a consensus in semiconductor equipped industry. So I could not go to front-end equipment now. And the second concern is quartz-related equipment demand. Currently, Japanese material maker and equipment maker related quartz L enjoyed extra demand of yield problem. But consensus in Hong Kong and Japan, this extra demand will finish around June or earlier. So many one are not bullish on Advantest now. But one good news is panel packages. TSMC required to use these technologies, but they did not start the capex. As the panel becomes larger, it will flex, making it difficult to focus on X reason. And the square panels are evenly wet only in the center when trying to spin coat, and slit coating is insufficient for the request for the uniformity. But now, Taiwanese package industry, especially TSMC, likely to decide to use smaller panels, 300mm square panels. So several equipment makers said to me they received meaningful volume of the order from Taiwan. Albac, not Albac, Canon, Screen, Disco said so. So I think it will become one of the second half recovery driver. And large mask is another good news is in this industry. Now LaserTech's order is almost zero now. We do not recover within 1 year, at least 1 year. Company based on company's official comment. But only one good news is large panels, large masks. When high-NA LISO introduced, LISO area only become 1/2. But Intel and NVIDIA would like to keep LISO area, so Intel requested to use large size panels to semiconductor industries. And last April, where said we will use blanks for large masks. But we'd like to price up 10 to 20 times as conventional blanks, and industry recognized it is where refused to make it. But last November, Intel's servant HC made mask blanks under the request of the Intel. So one of the subjects was disappeared. So we think if large mask comes, it will become the great business opportunity of LaserTech and JL. And I'd like to comment about current competition briefly. Now, Tokyo Electron got Cryo Etchers POR from Samsung. But Kyokushia lab RAM research now, and some of my contacts said to me, we'd like to use RAM's Cryo Etcher. Kyokushia already give all of important information of Tokyo Electron's Cryo Etcher to RAM. So RAM's current Cryo Etcher's performance is very excellent and almost the same as Tokyo Electron now. It is not good for Tokyo Electron. And I'm now pushing on Screen. Screen's factory utilization is better than other. And panel-level packages will help to achieve earnings growth in next fiscal year. For example, every front-end equipped company started to cut production volume since this March. For example, Tokyo Electron's etchers utilization in this first half is only 48%, Kokusai 56%. Yeah, this is calculated by my supply chain check. And applied materials, CMP 72, CVD 79, EPI 55, Spatter 66, Ion Implanter 72, Tokyo Electron's furnace 67, Tokyo Electron's quota developer 82, Everard's CMP 77. But the best equipment is Screen's single wafer cleaning system 86. And their factory at least will work almost full capacity until this December. And variation looks like cheaper. So this company have no attractive growing stories, but short term I like Screen now. That's all. Thank you, Sean.
Thanks for that comprehensive update. Let's move to hardware. Howard, what's the latest on the PC side?
Sure. Thanks, Sean. So, good morning, everyone. So I cover downstream tech hardware names, mostly on the PC and server side, but also PCB and passive components. So first on, I guess on PCs is, we're still expecting first half of this year demand to be relatively slow. Our expectation is going into the second half, that's when we expect demand to pick up more meaningfully as we go into the Windows 10 end of life in October, and the upgrades happen, closer towards that date. So first half, we're seeing some pull-ins because of tariffs that's impacting the builds in Q1. So we have notebook builds in Q1 being a little bit better than expected, down only 10% QOQ versus historical seasonality of down 15%. But because end demand continues to be weak, the Q2 builds are now below seasonal, up only around 10%, whereas historical seasonality points towards up 15% QOQ. So that's kind of where we're at. What we want to update today is, at the stock level, is Lenovo. We recently published a report taking down our numbers a little bit for the March and June quarter. This is because Lenovo reported numbers at the end of February, which had already baked in the 10% tariff impact on China, which was implemented in early Feb. But there was another 10% that was implemented in early March that was not baked into the guidance that was provided at when they reported December quarter numbers. And so we took down our numbers to reflect the impact from tariffs. We think it will have a 30 to 40 million US dollar impact in terms of the March quarter net profits. So we took down our net profit for the March quarter from a little bit over 230 million to down to close to 200 million US dollars. And then there's also going to be some lingering impact in the June quarter. Right now, Lenovo is trying to wrap up their notebook production facility in Vietnam. And so they're hoping that by the end of the June quarter, 80 to 90% of the notebooks being shipped to the U.S. market can be produced in Vietnam to bypass these tariffs, which is why we do not have any impact coming from tariffs baked into our numbers for this calendar year for Lenovo. So this did impact our price target a little bit. Our price target came down slightly, but we still like the stock, so we keep our overweight. I think right now we're seeing strong CapEx growth in the China market, and this is going to have some benefits to Lenovo. They are relatively small in terms of supply share to the China cloud customers, but the new entity list that was put out by BIS recently, added more domestic server suppliers to the list. And as a result, we think Lenovo could be a beneficiary because they had some H20 GPU built up at the end of last year. And based on our understanding, they're seeing better engagement in terms of customer engagements year to date. So we think they could be a China cloud CapEx beneficiary this year. So that's on Lenovo. And the other thing we want to update on is at the stock level is Wistron. So we basically kept the majority of our numbers unchanged in the model in terms of their forecast for notebooks, in terms of their forecast for GPU-based boards for NVIDIA and AMD. But we revised up our forecast for the GPU racks. So Lenovo is a primary partner of compute tray assembly for the U.S. enterprise customers like Dell, HP, and Cisco. And we are seeing increased forecasts being placed at Wistron from these U.S. enterprise customers year to date. So in early February, we raised our numbers one time, and this is the second time we're raising our numbers for Wistron. So at the GPU rack level, we continue to see orders being revised up for U.S. enterprise customers. We believe these are mostly for the Tier 2 and Tier 3 CSPs in the U.S. And so right now we're 10% above consensus numbers for Wistron for this year as well as for next year. And so Wistron continues to rank pretty high up in terms of our overweighted rated stocks within my coverage, just right below WeWin. So that's it from my end, and let me pass it back to Sean.
Yeah, Howard, just a quick question while you're at it. with the shortfall in GB200 narrative in the market, does that present downside to some of your stocks on the ODM side?
So I think in terms of what we're hearing from the supply chain this year, the expectation is still that they're expecting to ship 20 to 25K. Now, with more cautiousness coming out of the CIOs in the U.S., will that ultimately impact the rack procurement? I guess at this point, these companies in Taiwan, they don't know. So potentially there could be some downside, but just based on the forecast that we're seeing today, that number has not changed in the past couple of weeks. So our expectation is still 20, 25K, I guess with potential for downside if that forecast gets revised down as a result of just overall cautiousness on spending for the second half of the year.
Okay, thanks for that. Keep it moving. So Andy, why did you asked to take profit on China's smartphone supply chain?
Okay, thank you, Sean. Good morning. So I think this is consistent with what we had talking with investor from February. So I think the thesis here is we think the China smartphone subsidy is a good story. But if we look at what happened in stage 2 of the thesis is we see the good data in early February, but after that, I think the overall smartphone shipment data pretty weak. So in that case, if you look at share performance, I think Sunny benefit a lot from the China smartphone subsidy, the thesis from November last year. They significantly outperformed Lagan. I think now is around 50% outperformance. During the peak is even 70% around the outperformance. I think between the fundamental and share performance, we really see the couple. In February and March, we understand this is mainly because the Hang Seng Tech inflow is strong. But when the fundamental really seen decouple versus the share performance, I think that's time our investor will do some own call. So I think profit taking is our key message from February to now. And I think now is further confirming this like a message. We think it's time to further take profit and switching from this long Sunny short Lagan to long Lagan short Sunny, this pair. I think the thesis here is very clear because October last year, we haven't seen this like Lagan passing through this peak season, moving to slack season. And now on the opposite, Lagan is passing through the slack season and well positioned to enjoy the potential peak season in the coming 2 quarters. Well, for Sunny, I think it's the reverse. Positive has been reflected, and I think risk reward is less favorable. More important, I think we look at Lagan. If we look at monthly shipment as well as margin trend, clearly during the slack season, both are weak. But when we move into the peak season, both shipment and margin will improve, and that will be a key rating catalyst. Beyond that, I think at this moment, when we talk with the investor, we find the sentiment expectation for iPhone New Year shipment is very weak. So in that case, I think expectations are very low. We don't see people buying the iPhone supply chain names at the current stage. But if we look at the 2025 narrative, I think expectation is low. But when we're having WWDC as well as the iPhone 17 launching, I think there's still likely to having positive sentiment, especially when we look at both software, Apple Intelligence, I think still having new content during WWDC. And for the hardware, iPhone 17, the lens design on the back end is totally different. And in that case, I think this is likely to introduce potential new buyer for this smartphone and also benefit the supply chain names like Lagan. Beyond that, I think for our coverage universe, investors are asking, now we see the Hang Seng Tech index having profit taking and share price getting lower. So which stock should we buy after this round of profit taking? So we will recommend 2 stocks. One is AAC. This company, I think now is seeing the continuous recovery after 6 years consecutive earning decline. So I think the key issue is on the optics side. So if you look at the optics from 2018, they have this business, but from 2018 to 2022, continuous loss making. It's very bad. 2023-24, you start to see the gradual turnaround, especially 2024 is the first year you start to see some positive gross margin. Okay, so in that case, I think this is very important for the company from 2025 and onward. We think optics will continue to turn around, improve. And the overall business, all the other segments will also see positive growth. In that case, this year, we'll expect the gross margin to further improve from last year 22%, now this year to 23-24%. And this margin recovery will continue to support the company's earning growth. The second company we will mention is BYD Electronics. So this company, I think 2025 will be another year of growth, and the growth content key rating driver will be ADAS related. So BYD's parent group is BYD. BYD this year has officially launched their ADAS penetration program. So overall, all these vehicles above 100,000 RMB will have the ADAS. So I think this will help BYD generate strong new EV revenue growth. Last year is around 20 billion revenue. This year we think this will go beyond 30 billion. That will be a very important driver for the company. And we know in February and March, the share price are really crazy, very good. At the time, it will hold on. We don't really raise our price target because we think the near-term sentiment is too good. Expectation about the EV story is too good. Earnings expectation, some peers are raising unreasonable forecast. But now, after this result, we see the significant derating of the share performance, even drop below our price target. So I think this time is really good timing to revisit the thesis. If you like the company's long-term story, valuation getting more reasonable, this is the time we think we can accumulate the stock. So buying on the weakness, AAC and BYD. So that's the key message I want to deliver. Thank you. I will turn back to Sean. Thank you.
Yeah, thanks, Andy, for that. So I think we're well past the half hour. So in interest of time, we'll just conclude here. Join us again next week. We'll have another very interesting topic for you at 11 a.m. Hong Kong time, Tuesday. And thank you for joining us today.